So wonderful. Good morning, ladies and gentlemen, and welcome back to our Forex Morning Call. In my name, it's me, Marcus, from DowHow Trading. Welcome to the Forex Morning Call. It's August. It's the 3rd, 2022. And we can talk about trading independent from any broker. We can talk about almost everything. And you know, but this free webinar will not replace deeper education. So if you want to go deeper in logical trading, then feel free to grab the course. Below the video on YouTube, you will find all responsible links for that. So I hope you're doing good. You had a great start into your own trading day and you enjoy the weather, especially we here in Germany. We have lovely, it's really hot, but it's an awesome, great summer this year. Dori, good morning. Alexandra, good morning. And Johan and Alex on Traders Yard also. I'm really, really grateful and appreciate it a lot that you spend your precious lifetime with me every morning here. I will do my best to give you answers, so feel free to fire free the chat here on YouTube and of course here on Traders Yard. I see your questions and we can talk about almost everything. So if you have guys around you, they are interested in structured trading, they want to follow strict rules like you and me, then you can share this link from YouTube and they can, the playlist, of course, on the YouTube channel, they can check the last recordings and then they can see if this is a cool thing, what we are doing here. And yeah, invite people around you if they want to see something different to all webinars of any brokers. Because this is real trading, we suffer together and we are happy together. That's the point. Aurel, Yanis, good morning, and Thomas also. Nice to have you here. Okay, before we start, you know, as always, it's the rules. General risk warning. Trading with stocks and financial assets can expose your capital to substantial risks, possibly even beyond the capital you have invested. Trading is not suitable for everyone. Investment successes as well as profits from the past do not guarantee success in the future. So you're responsible for your own trading. So what's on the list for today? Already done is the employment rate. New Zealand, here we have, it's kind of what the market expects, except the unemployment rate is a little bit higher, 3.3. Previous was 3.2 and the expectations were 3.1. So it's a little bit different. 1:30, Mr. Biden will have a speech. No, there is actually, I could see it in the news, a little bit trouble with China because Mrs. Pelosi is visiting Taiwan at the moment, you know, and China has kind of problems with Taiwan because China thinks Taiwan is a part of China. It's one China. And so, yeah, let's see. And at 11 o'clock, retail sales here in European Monetary Union. And at 4 o'clock, the ISM service PMI this afternoon. And if you follow me long enough, then you know I don't care about the numbers. For me, just only one number or two numbers are really important. That's the rate decisions. And of course, the unemployment data on this week, Friday. Why? I want to be a part of it. Because the numbers are just numbers, completely neutral. It's just a number, 3.3 over and out. Okay, in our perception, we can see, okay, it's a bit higher than the consensus and it's a bit higher than the previous one, but it's just a number. And now we start to interpret the numbers. What could that mean? So, and then the big analysis begins. So, and then banks and you know, the economy scientists and something, they have role models. And then they start to analyze and to interpret how this number will fit to their roles, to their models. And then they give their traders the information what they have to do. But this is not, that's not the way how we should act as private traders, because as you know, we have to follow rules. Yeah. So please take it for that what it is. It's just neutral numbers. The rest is pure perception and interpretation. And with perceptions, interpretations, analyzing, predictions, you cannot make money. You can make money with buying and selling. And in a zero-sum game, in a game of mathematics, you need a mathematic edge, which means you need fixed rules and models, analysis, interpretations, predictions are not rules. I think you can grab this in a logical way. Petya, lovely good morning. Okay, let's come to our charts. And in case you maybe are new in this show, or maybe you watch the recording, my trading style is really simple. I'm a Dow trader. DowHow, it's the correct know-how about the Dow approach. What's the Dow approach? I can show you. Dow approach is really, really simple. Dow approach says you need a trend. And if you have a valid trend, then use the correction, a cheap price, to buy cheap and sell expensive. And my exit strategy is trend following. I try to follow the trend as long as the trend will take. So, and this is what I'm doing. And this is a strategy. The entry strategy that Dow approach is 150 years old. 1879, Mr. Charles Dow and Edward Jones figured out. They didn't find it. They figured it out by watching the market, and they say, okay, it's trading. It's completely normal trading, like any trade and in grocery or something like this. Okay, if you are a trader and not an investor, then you have to buy cheap and sell expensive. And by the way, in trading here in the market or in the markets, we are traders because we are trading the price and not the product. So this is the strategy, and the exit strategy is your personal working style. You can trade in and out, or you can follow the trend. It's a kind of up to you. And I trade in, I changed my trading a bit because I struggled with my account because I still missed too many signals. So actually I have a mix between 4-hourly chart and daily chart. And in 15 minutes, I show you every day how you can trade in 15 minutes in day trading, in case you can afford this, just for your information. So first of all, we start with DAX 40 in 15 minutes. And as I mentioned yesterday, check it out. That was the point of control yesterday, you remember? And I drew yesterday the rectangle because the probability that the point of control move to the upper side when the price remains on the upper side, then it will happen. And you see, it happens not perfectly, it's a little bit lower, but the direction was clear. And now the point of control is actually here. So you see how the price is working by volume. So through the last 2 days, the volume was at this price higher than the previous point of control. So therefore, the point of control, the fair price, not the fairest price. The fairest price is always the price which you can see right now on the right side of the chart when the stocks or when the exchange by balance, keep in balance, supply and demand. This is the fairest price. But based on the historic volume, yeah, there is a fair price based on the historic volume. And you see that's 13,441. So what does it mean? It means that the market literally say, okay, we agree with the higher price. Yeah, we accept as a fair price now a higher price. Otherwise, there would be not that volume. Okay, you see, actually pure logic. So what's about the trend? How you can use the strategy? Strategy is really simple. So yesterday, you had a great chance to go along here in this second trend arm. There was a second trend arm, there was a great chance. Okay, it should, if you trail the stop loss to the last 0.3, then you have a loser. If you trade, and this is my proposal, the moment you have a hit, which means you have a close above the 0.2, it makes no sense to have a loss. Yeah. In case you trail the stop loss, at least in profit, and then you have no loss. Then there showed up a new downtrend, and the downtrend in the second trend was always great. Look, there was the balance candle. No, sorry. There was a balance candle here. So the perfect entry was there, and you had a hit because there was a trend continuation. And that means, okay, it was enough to trade a stop loss into the profit to make the trade safe. So you see, 2 trades, no losses. That's a perfect and a really simple strategy. So now actually on the right side of the chart, you see that they're showing up a new uptrend. And now we are coming to the second move. Now we are waiting for the second correction. And then you can wait for a balance candle. And then you can set a pending order, stop buy on the way up in case that there will show up a new trend. So you see, simple, not really simple. Is it easy? No, it's not easy. Yeah, because you have to stop analyzing, you have to stop interpreting, and you have to control your emotions. Yeah, it's a simple strategy, but trading is never easy. And if you want to come much more faster to your success, I just can recommend to have a mentor. So I have 4 mentors for the last 23 years now. No, not 23, 17 years, 18 years roundabout. I had 4 mentors. First, I had 1 main mentor, and the rest of the years, I got 3 more mentors. And without my mentors, I couldn't make these webinars. I couldn't make trading at all, by the way. So let's come to the higher time frame, and let's go to 4-hourly chart. And we start, of course, with today we start with British pound US dollar. So you see, I tried to catch the trend. It was that one, but it was a 0 gain. It was a 0. But then we expected last week the rate decision, and I avoid to make a trade. So actually, in this case, it was a bad luck because the trend was continuing. But that's my rule, by the way. Yeah, if I'm close to the rate decision, I never open a trade because the probabilities, it's a kind of gambling, and I'm not a gambler, I'm a trader. And if I cannot estimate, if I cannot calculate, then I don't make trading, of course. So now we are on the 5th trend arm. In the 5th trend arm, statistically spoken, is not allowed to open the trade. So let's see what happens next. I'm on the sideline. Euro dollar. That's cool. I had a trade. It was a 0 because I traded a stop into profit because I had a hit. So now the price is going down, and you see they're showing up 1 balance candle. Yeah, and now I'm waiting for the second one, and then let's see if I can make a trade again. But it's in the 3rd trend arm we can make. So if the price is stabilizing here, maybe it's a cool thing to open a trade on the way up again here roundabout. Gold chart. Yuan, this is for you. Gold chart. So in gold chart, we have an uptrend. Yeah, there is an uptrend. So this is this a perfect balance candle? And you know, we have a clear description for a balance candle. Yeah. And the balance candle is clear described. The shadows on the upper and lower side must as double as the body. So how we can figure it out? Yeah, okay, let's make the body. Okay, it's not working. So let's see. Can do this. Jesus Christ. Yeah. No, that's not really working. Okay, then I will do it in this way. So let's see if this is working. So this is 1. And let's see if we have as double roundabout. On the lower side, yes, but on the upper side, no. So it's not a clear balance candle. So therefore, I just let it go for the moment. And on the other side, there's a downtrend too. And I trade only perfect signals. And the balance candle is clear described. The shadow must as double as the body. And it's not. On the lower side, yes. On the upper side, no. So that means it's not so clear. And I love clear signals, especially if we have a contrary trend. So just wait until this candle is over. Will this be at 11 o'clock a clear change of color? Then I will set a pending order for long up here. And if there will show up a next balance candle, then I have to see, okay, there is a downtrend also. Okay, so keep in mind. Then Bitcoin. Bitcoin, we have two trends. The main trend is facing upwards. We are in the third trend arm here. We failed for a trend continuation here on the upper side. It was a fake breakout. Now we are back in the correction, which means I have a stop buy order in case that Bitcoin will continue the uptrend. Yeah. So if this will be a balance candle, a clear balance candle at 11, then I can trail my entry closer. But you see, we have a downtrend too. And here we are on a second trend arm. So I set a pending order stop sell in case that the downtrend will continue. Yeah. So let's figure out where is the point of control. Let's see this. Point of control is on the lower side. It's here. So that's not a meaning, by the way, but you should know where you are with your price. So then we have Dow Jones. Dow Jones is in the fifth trend arm right now. There is nothing to do for me. And you know, point of control is much higher. I guess, where is it? Oh. Yeah, point of control is here. So here we go. We have enough space to go up, but we're on the fifth trend and we have to wait for a new trend. And finally, DAX 40. Yeah, here we go. We had some changing of colors here yesterday. And that means I set a pending order in case to go up. Yeah. But we have also, look, there is a downtrend too. And that means we have to set a stop sell order too. We will never know which trend will continue. So as a trend follower, you stop interpreting. You just see what is there. If you want to take it for this, you can say, okay, this is my analysis. And you can use this word, of course, if you do an explanation, if you explain what is there right now to see if you can fit your rules, if you can follow your rules or not, but not interpreting. Yeah, you can check. I avoid to use the word analysis because it's so clear, it's so close to interpreting. So I used to say, let me check the chart. So, and checking means, okay, it's my checklist. Do I have my trend? Is it a valid trend? Is it a young trend? Do I have a correction? And do I have a balance candle or change of color? So that's my check. And then I decided, do I have to make a trade or not? That's all. Analyzing is always really close to interpreting. So maybe it's a good thing for your subconsciousness also to use the word, let's check the charts. Yeah, if the rules are there. So that's the only point, that's the only job we have to do. So that's all the most important parts. And by the way, DAX 40, Dow, Bitcoin, gold, Euro dollar and pound dollar, I trade in 4-hourly charts still. The rest, just only daily charts. So let's come to my running trades. First of all, I wanted to show you the two trades they are done right now. It's Canadian dollar, Japanese yen. So we had a wonderful profit, really wonderful profit, because I trade my hard stop and I see, okay, correction starts, get out. Yeah. And that means in this chart, we are done with 4-hourly chart. Now I switch to a daily chart, and actually, yeah, there is just in the 4th trend arm, and there is nothing to do for the moment. So I can delete this chart. Also, US dollar, Japanese JPY, also wonderful profit. Yeah, I use this lovely trend. So we are done here also. And now in daily chart, I switch to daily chart. Actually, to be honest, we have a break. Yeah, in daily chart, we have indeed a break, but no new trend. Actually, in US dollar JPY daily chart, we are trendless. And trendless means nothing to do. You know, NT, no trend, no trade. Okay, so we can delete this from the list also. Doreen, good morning here. Wonderful. So let's come in. Especially, to be honest, this is what I'm doing in my asset management. You know, I'm a trader in an asset management. We have offices in Frankfurt, in Switzerland, in Austria, and in Tokyo. So, and I used to trade kind of higher accounts, as you can imagine, in asset management. So, and I love the freedom to not being captured in front of the chart, because in daily chart, it's just only necessary to check the charts in the morning and or in the evening. How cool is this? And to be honest, if you're patient enough, you will make much more money in daily chart than in every other time frame, because the less the time frame or the lower the time frame, the smaller the time frame, the more stress you have. And stress is an emotion. And the moment you feel emotions, you will act with emotionally. And this is the moment you will lose on a long run, because your emotions should never affect your trading style, the technical part in trading. Yeah? But this is the reason why so many people fail in trading, unfortunately. So here we go. Let's come to my running trades. It's Australian dollar Swiss. We have the 3rd trend arm here. And we are just waiting if we see a trend continuation or not. My stop loss is above the last 0.3 with a question mark, because if the price is going so high, then we can suppose that we see a new trend or we see a higher extension of the correction. But let's see. Canadian dollar Swiss, little bit in loss. And that's interesting right now, guys. Actually, so we have this downtrend, and this is what I'm trading right now. Stop loss is above the last high, temporary high. But there is a long trend. Also, there's an uptrend also. And by the way, there was no break, just a fake. If this will be a change of color today, then I have to open a long position too. I guess I will stop the short and it will open a long. I have to trade what I see and not what I think. Very, very important. Just follow the rules. Oh, there's a great question, Ron. Oh, that's cool. Are the trends in higher time frames more stable than the lower ones? Yes, they are. Why? About volume. Don't forget, the big money, like the elephants at the water hole, cannot jump into the water hole, because otherwise there would be no water in it anymore. So big money has to go slowly in and slowly out, because about their big money. So it's a logical thing that higher time frames are much more stable and then lower time frames. Yeah, I know people used to say, or they think they can make much more money in lower time frames. But this is an illusion. It's not true. You have much more stress. Of course, you can make same money in lower time frames, but then you will have much more stress. And if you are partial or part-time trader, then the last what you need for trading is having stress. But this is my experience after 23 years now. And this is why I use and I love to trade in higher time frames, because the trends are more stable. And check it out. For example, I give you a home exercise, Ron. If you check Canadian dollar JPY in daily chart, then you will see how long a trend can last. Try it. It's really cool. Okay, so crude oil is the last one, which is running in 4-hourly chart. So I trailed the stop loss. And yeah, I'm still in and just waiting what happens next. I don't care. And back to this one about long and short. There's a question about, Alex, when is the time to make the perfect hedging? So I just share my experience with you. There is no right or false in trading, by the way, okay? So in my opinion, there is no perfect hedging. So what is hedging? And it's a misunderstanding of hedging. The word hedging has its origin in the commodity traders, the futures traders. Why? They are farmers. They are producers. They see the harvest, they see the products, and they know the result of the seasonal harvest. So what they do, they hedging what they expect of the harvest, for example, about the future markets. That's real hedging. You have a product, you can make money with your product as a producer, as a farmer. There is the origin of hedging. And you see, it's not good or it's perfect. And then you make a hedge in the future markets. Producers and farmers. It's the very famous COT data, commitment of traders data, yeah, the COT numbers, yeah. So, and they are not traders. They are just see the product and the possible harvest, and they're going to the market and make a hedging that they can make money on both sides with the product and with the hedge. But people, I would say, use this word to find a possibility to not setting a stop loss. They make hedging in the same market, going long and short. Most, if you listen to the people, they use the word hedging in trading, then they don't want to have a stop loss. Or they use different time frames. Maybe they are long in 4-hourly chart, but they use the correction to trade in 5-minute chart. They use it to use the word as a hedging, but it's not that real hedging what it means as a hedger. So, and therefore there is no perfect hedge. What I see, I want to write the trend, and I don't care if the trend is my main trend or it is my corrective trend. So when is the perfect time to have two trends? Maybe I should switch this question. When is the perfect time to use two different trends? When the rules are there. That's really simple. It's nothing to do with a hedge. It's just when I can stick to my rules. And if you have a main trend which is facing down or up, and the correction is running in its own trend, then it's the perfect time to stick to the rules. This is what I can say about this point. Okay. Okay, so next one, EURUSD. I opened a trade. We were deep in the correction in the third trend arm. And this is the part. Look, the downtrend, it's the main trend. And we are in the second trend arm. So we must be prepared in case that the downtrend will continue. But also there is a corrective trend, and there was a chance to use the second trend arm. And now we can use the third trend arm. So therefore I open a position to use the third trend arm of the corrective trend, because I will never know which trend will continue finally. But if the trend, if this trend will not working and I see contrary signals, then I have to ride the downtrend also. And that's the perfect time to have two trends in different ways. So pound New Zealand dollar, yeah, there's just only one trend, and that's the long. No, it's not, because the short is also stable, because there were fake breakouts here on the upper side. So we must be prepared in case that the downtrend will continue. Actually, I have a long position because it's the third trend on for long. But if the price is not working for me, then I will set a stop sell order and will never know which trend will continue. Dollar Canadian dollar, long. There's just only one trend, that's the long. In the third trend arm, there was a fake breakout on the upper side. Then we saw a correction. And now balance candle, change of color, and the position is running. Yeah. And of course, the stop loss, yeah. It's up to you. You can trail a stop loss to the last 0.3, of course, or you can trail it there. It's just up to you. Yeah. So I used to do to the last 0.3, and there I will have a kind of alarm here. If the price is going lower, then I will close. Okay, so then NASDAQ, cool running. Here we go. In the second trend arm, that's the green one, because there was no break, just fake breakouts. And I trailed my high stop into the profit. I cannot lose money. If there will be no trend continuation, the price is going down, then I don't have a loss and I can make a re-entry. Yeah. And if you see a trend continuation, how cool is this? Ride the trend and the buckling horse. Okay. So, oh my gosh, time is going here. What do you do if a higher time frame trend line conflicts with a lower time frame trade? It's a very interesting question. I don't care about this because you should not mix the time frames. Why? It's logic. I would suggest that's too deep in education. So you have maybe it's time to go to your education in the course if you want. On the watch list, still pound Aussie waiting for short. Pound daily chart today, balance candle. If this is today, we can set a stop buy tomorrow or this evening. The daily chart is over midnight or close to midnight. Yeah. So not during the day, not during the day. Aussie Canadian dollar. It's the fourth trend arm. I don't trade the fourth trend arm, except we had profits before. It's a new uptrend waiting for the correction. Kiwi dollar also waiting for the correction. Long for, by the way. Euro JPY movement kind of over, just waiting for the rebound. And S&P 500 also. We are in a second correction right now. Let's see if we can do something. Okay, I don't want to waste your time too much. Thank you for listening, guys. It was my pleasure. I hope we see each other tomorrow again. It's me, Marcus from DowHow Trading. Grab your links below the video right now. I'm looking forward to see you in the course. And I wish you a wonderful and lovely trading day. Have courage and be kind. And may the force of the logic be with you. See you tomorrow.